Today we are going to review Social Security and Railroad Retirement Equivalent Income. We'll start with Social Security income. Social Security is the common source of income for the taxpayers we typically see at the Tax-Aide sites. Each of you should have strong knowledge of this material. Next, we'll cover Railroad Retirement Income. While not as common, we do see clients who have Railroad Retirement Income. Finally, we'll talk briefly about lump sum Social Security income. While rarely seen, you should be aware of what to look for on the Social Security statement. Lump sum payments typically occur when a Social Security claims approval is delayed and back payments for a prior year or years are made in the current year. Social Security benefits are in scope. During intake, if the client has checked yes to Social Security or Railroad Retirement Income, obtain their Social Security SSA 1099 or RRB 1099 forms. For some taxpayers, a portion of their Social Security benefit will be taxable on the federal level. Massachusetts does not tax Social Security income. Federal taxes on Social Security happens if the taxpayer has other income in addition to Social Security or Railroad Retirement Type 1 benefits, such as wages, self-employment, interest, dividends, and other taxable income that must be reported on their tax return. These other sources of income must exceed certain thresholds. The taxable amount is based on IRS rules based on their combined income. Combined income is defined as the taxpayer's adjusted gross income plus non-taxable interest plus half of the Social Security benefit. This total is considered to be the combined income. Taxpayers who file a federal return as an individual and the combined income is between $25,000 and $34,000 may have to pay income tax on up to 50% of their Social Security benefits. When combined income is greater than $34,000, up to 85% of the benefits may be taxable. Taxpayers who file a joint return and the taxpayer and spouse have a combined income that is between $32,000 and $44,000 have to pay income tax on up to 50% of their benefits. When combined income is greater than $44,000 on a joint return, up to 85% of the benefit may be taxable. TaxSlayer will calculate the taxable portion of Social Security entered in the system. We'll look at how to see the taxable amount on the return shortly. When entering Social Security data into TaxSlayer, you will be entering the data for both the taxpayer and spouse at the same time. We enter the annual benefit, Medicare premiums, and federal tax withheld for each recipient. In most cases, the Medicare premiums are entered on the Social Security input screen. However, if the return includes a self-employment Schedule C, these premiums may be deducted as self-employed health insurance. Steve reviewed the rules for when health insurance premiums can be included as expenses on the Schedule C. If this applies, the Medicare premiums will not be entered on the Social Security input screen, but will instead be entered on Schedule C expenses. Premiums entered on the Social Security screen are automatically transferred to Schedule A itemized deductions. Let's take a look at a typical Social Security statement. Review the SSA 1099. Confirm that you have the current tax year and the taxpayer has provided the official form, not an estimate, for the next year. Many times taxpayers bring both with them. Box 5 shows the income to enter into TaxSlayer. It is the net benefit for the tax year. For the Medicare premiums or healthcare expenses for Schedule C where applicable, add Parts B and Part D premiums from Box 3. Box 6 includes any federal tax withheld. If Box 3 includes any benefits for prior years at the bottom of Box 3, this indicates a lump sum payment was made for a prior year. Should you see a statement with prior year income included, you may need additional information from prior year tax returns to complete the lump sum worksheet and the return. If you have a client with prior year payments, don't hesitate to reach out to a more experienced counselor at your site for assistance. Two parts to railroad income, Tier 1 and Tier 2. Tier 1 railroad retirement benefits are equivalent to the Social Security benefit that a railroad employee or beneficiary would have been entitled to receive under the Social Security system. These benefits are called Social Security equivalent benefits, and for tax purposes are treated like Social Security benefits. They are shown on a blue Form RRB 1099. Tier 2 benefits are treated like pension income and will be covered in the retirement income presentation. Let's look at a railroad retirement income sample 1099. RRB 1099 will have a blue section followed by a green section. The blue section is the part that is Tier 1 and what is considered to be the Social Security equivalent. Box 5 includes the Social Security benefit. Box 11 includes the Medicare premium, and Box 10 includes any federal income tax withheld. Tier 1 data is entered on the Social Security screens in TaxSlayer. Again, if there is a self-employment Schedule C, this premium may be entered on Schedule C instead of on the Social Security input screen. If the taxpayer had both Social Security and railroad retirement income, you will need to add the benefits together prior to entering into TaxSlayer. The green section labeled RRB 1099R is the pension portion. We will review this in the next training session. Let's look at how Social Security and railroad equivalent Tier 1 income are entered into TaxSlayer. Under the Federal section, click Income. Then click Begin for Form 1099R RRB SSA. Note, you can also type SSA in the form finder and select the form. Next, click Social Security Benefits. Enter the taxpayer and spouse data from the SSA or RRB 1099s and click Continue. The amount entered on the Social Security screen will be included on Form 1040, line 6A. If there is a taxable amount, you will see it in box 6B. For example, the taxpayer had other income and a portion of the Social Security is taxable. In this case, $1,980 of the Social Security benefit is taxable on the federal return. The taxable amount will never be more than 85% of the amount of Social Security included in box 6A. A taxpayer who had only Social Security and no other substantial income in prior years, and the Social Security was always non-taxable, may have a taxable portion in a future year. For example, when the taxpayer reaches age 72 and starts required minimum distributions on an IRA, that additional income may make part of their Social Security payment taxable. You may have to explain this to the taxpayer. Many taxpayers are under the impression that their Social Security is never taxable. That is true for the state of Massachusetts, but not on the federal side. As I mentioned earlier, sometimes when the approval process crosses calendar years, the Social Security benefit may be for multiple years. This may result in a tax impact in the current year that could be reduced by using the lump sum payments worksheets. To use the lump sum worksheets, you will need the taxpayer's returns for each year included on the SSA 1099. You will need adjusted gross income, taxable Social Security, and tax-exempt interest. Lump sum payments do not require amendment of prior year returns. All the data is entered into the current return. To determine if you need to complete the worksheets when there is a lump sum, complete the return and check the 1040 line 6B to see if any of the Social Security is taxable. If none is taxable, you do not need to proceed with the lump sum worksheets. If there is a taxable portion of the Social Security, we will enter the prior year's information to see if the taxable amount can be reduced. Enter the total on the current year input screen from box 5 and complete the lump sum worksheet for each prior year with income. TaxSlayer will calculate and apply a lower taxable amount based on your entries. To enter the lump sum payment information, select Begin Worksheet on the Social Security input screen. Enter the data for each year. Again, this is not common and you should request assistance from another counselor as needed. And covered Social Security benefits, including lump sum payments, as well as railroad retirement equivalent Tier 1 benefits. Let's pause here for questions.